Good morning, everybody. Let me fix this mic. I think it's like right in front of my face. Good morning. Good morning. All right. So we got a lot. We got a lot to cover today. It's gonna be a lot in this stream. Good morning. The biggest news is pretty much the biggest news right now is the whole tariff stuff. I'm catching up on what happened yesterday, but basically the biggest piece that came out is the whole tariff business that basically the president is levying against Canada, Mexico, and China. So we're gonna take a look at that, and then we're gonna just go down a bunch of interesting things. Like we always do. We'll look at a bunch of charts. And then we'll go into a real estate segment real quick, and then we'll end it off with looking over some ETFs, and then I want to start adding lost corn segment to this stream. I don't know how many times I'll be able to do it because I don't know how many. I'm sure there's no shortage of lost corn, um, but man, holy hell, this one is funny. So we'll be taking a look at that. So good morning, everybody. All right, let me just set up here real quick before I start going into it. Good evening, everybody. Again, happy Friday. Happy Friday. All right, thank God it's Friday. Drop in the chat. Let me know what you guys are going to be doing this weekend. If you guys got any plans. Happy Friday. All right, let's get into the segments. All right, so the first piece of news that came out. Trump, nothing Canada, Mexico, or China can do is going to delay the February 1st tariffs. All right, so he is planning to levy tariffs against our trading partners to the south and to the north, as well as China. All right, so this is just a quick video. Hopefully there's not an ad on this.
With the president in the Oval Office, and I can confirm that tomorrow, the February 1st deadline that President Trump put into place at a statement several weeks ago continues. The president will be implementing tomorrow a 25% tariffs on Mexico, 25% tariffs on Canada, and a 10% tariff on China for the illegal fentanyl that they have sourced and allowed to distribute into our country.
And that's pretty much it. So, President Donald Trump said on Friday that he would impose hefty new tariffs on 25% of goods from Mexico and Canada and 10% imports from China, and nothing could be done by the three countries to forestall them or basically halt them. Trump did, however, reference a potential carve-out of oil from Canada, saying that the rate would be 10% versus 25% planned for other goods in the United States from our northern neighbor, but he indicated wider tariffs on oil and natural gas would be coming in mid-February. So this obviously sent oil prices, gas prices higher. So this is not good, especially for Americans, especially for people who because winter's still here. There's several states still going through cold weather. So, this is not going to be good for the average consumer. This is obviously not going to be good for American families, especially with, if people are commuting to work and they need, gas money. It's only going to get more expensive. But anyways, kind of just moving on. The whole point of this is because he wants to, basically have the countries, to the south and north of us, basically do more to curb the whole fentanyl that's coming into the United States, right? And just as a quick reminder, this isn't about politics on this channel. We're talking, finance. We're talking investing and things like that. We're not really focused on red, blue, who's in charge, whether you love them or hate them. All we care about as investors is where do we place our money? How do we take advantage of the current environment? How do we position ourselves either offensively or defensively? And how do we make a profit or not lose money, right? That's what we care about here. All right. So essentially, yeah, that was pretty much all he said. And it obviously riled the markets. It riled the markets up quite a bit. If we look at the VIX chart, which is the volatility index, basically, the ups and downs that you see every single day, volatility really, really, really spiked. Right, it really spiked towards the end of the trading day, and we can see that it obviously had an effect on all markets. if we take a look at the NASDAQ 100, we see that it pretty much ended negative for the day. Pretty much ended negative for the day. We look at the S&P 500, again, ended negative for the day. Bitcoin, this is the 5-day, but if we look at the single day, it looks like it almost already recovered. But you guys can see this like pretty much massive drop that it had, right? Almost 3%, a little over 3%, and it looks like it's starting to recover now. Yeah, but this piece of news, these tariffs obviously had an impact on all the major indexes, right? On the markets as a whole. So, how did the bond market do? We also see that bonds went down, right? We see that bonds also were affected. So it seems like no asset class was safe from this. If we look at gold, gold looks like, it probably stayed above water, but also not really. Yeah, I don't know why this is green. It really shouldn't be, but yeah, they ended negative for the day too, right? So even gold went down. And if we look at real estate, real estate also was affected and down for the day. So just this little piece of news here was enough to rile the market enough that nothing was safe. Nothing was safe. And again, this type of stuff is going to continue well into the future. Well into the future, this stuff is going to continue. I covered it in a last stream that basically I don't think this is really going to stay. It's my prediction that it's not going to stay. But again, with our current president, he is he does things really differently. The idea is that he would levy these tariffs against these countries to basically force them to bring some manufacturing into the United States, bring money into the United States. But the whole point of these tariffs is to curb fentanyl. I don't know if that's entirely true. We'll just have to take a wait and see approach and see what happens, because again, this is going to put a lot of pressure on just average everyday consumers. What's up, Aloha State of Mind? They say after today, don't buy airline stocks for a minute. Yeah, I mean, exactly. So, which is going to lead me into this last piece, the U.S. energy ETF, which I'm just using as kind of like a not so much as an index, but just as a temperature of what's going on in the energy sector. We could see this also went down for the day, right? This went down more than the standard indexes, the NASDAQ 100 or the S&P 500. So there was nothing safe from this news. Really, really nothing safe from this news. And again, just going back to this, I don't know how long this will stay. There was a comment in here that they're looking to levy more on other countries, especially in Europe. But right here, it says right here, more tariffs are on the way, the Republican president said, saying import taxes were being considered on European goods as well as on steel, aluminum, and copper, and on drugs and semiconductors. We're going to be putting tariffs on steel and aluminum and ultimately copper. Copper will take a little longer. These are everyday goods, that we use for everything. Everything. Just in the real estate business, copper is a big one. Copper is a big one. It's all the piping, right? So this is going to make everything cost more. Lumber comes from Canada. There's other goods that come from down south from Mexico, at least, and I'm speaking just specifically on real estate. But this is going to put even more pressure on home builders. This is going to put more pressure on home builders because everything's going to get more expensive. Houses are going to continue to get more expensive. So again, this is really hard to navigate, and again, if you want to take more of a defensive position, hold a lot of cash. Hold a lot of cash. You can continue to DCA or dollar cost average into your favorite companies, right? Your favorite ETFs, your favorite stocks, your favorite, whatever, cover call ETFs. But yeah, this is obviously going to be putting a lot of downward pressure on that stuff. All right. If we look at the 10-year, this obviously spiked. Well, not obviously, but this did spike for a little bit of time. It fell below finally the 4.5 range, which we haven't seen in a while. So that was nice. And then, of course, it went back up. So again, how do we navigate something like this? The best advice, what I'm gonna do is just continue to hold cash, position myself a little more defensively. Again, I'm not gonna be yellowing things. I think I think this may even be more prudent to be in cover call ETFs, to be perfectly honest. If you're looking for income, uh, will growth be stagnant? I don't think so. I hate that I just deleted a chart I had, but the S&P 500 has been returning, or the total market, the U.S. equity markets have been consistently returning positive returns over the last couple of years, over the last basically over the last decade. Uh, even with those big blips, like C19, it's still been very consistent. So I don't think the market's going to trade sideways at all. I don't believe in that thesis one bit. I just I don't. Let's see. Aloha State of Mind says, referring to the plane crash in Philly. That's two plane crashes into. Oh my God, another plane crashed. Oh, come on. That's not cool. It's a wealthy love. Hey, what's up? Good evening, Dan. Yeah, it sold off pretty hard, and it sold off on the whole tariff stuff. Man, that sucks. I can't believe another plane crash. That is so unfortunate. Man, that's so unfortunate. Dang, that's so unfortunate. Um, Shoot, man. I kind of like put a pause in the stream, man. I don't know. I don't even know what to say. Like, damn, that's just so bad. Yeah, it's scary when plane crashes happen. They are very rare. Like, they don't happen as often. So for them to happen consecutively this close is kind of alarming. Um, yeah, that is so sad. You couldn't turn on the news without hearing about that plane crash into the helicopter that happened in where I think it was close to DC, if I'm not mistaken, or something like that. I'm not gonna go down that rabbit hole. I mean, that's yeah, I'm not gonna go down that rabbit hole, but it is incredibly sad to hear that stuff. Anyways, to try and get back on track and lighten the mood a bit, uh, this is just moving on from the real, or moving on from the ETFs, the stock market, everything else that was affected. Just taking a quick look at this at real estate. So the U.S. 10-year Treasury and REITs, the REIT, all equity REIT, they call it the FTSE REIT, REIT index, which is basically a composite of all REITs, right? You could almost use VNQ. I don't think VNQ is really all that good, to be honest. I've never actually dived deep into VNQ and see if it matches with the FTSE all equity REIT index, but we can see right here we're now at that cusp where the 10-year is starting to invert, right? And REITs are starting to rise, right? So hopefully this trend continues well into 2025. And this is just going to better position REITs for a great year, right? Again, a lot of REITs out there, they have disciplined balance sheets, great management. The occupancy is very high. They're still getting their rental income. They're still able to grow. They're still able to obtain new properties, develop new properties. I mean, they got it going for them this year. Not all REIT sectors, don't get me wrong. And I already covered the whole office sector stuff. But REITs in general, I would say, REITs in general are poised to perform better this year than they have in over the last couple of years, because the last couple of years have been absolutely tough for the real estate market, and hopefully this 10-year continues to go down or trend downward. So a lot of, because there are a lot of real estate companies out there, real estate investors that are looking to refinance. They're like right at the cusp of probably going in the red, like severely in the red. And there's also that $500 billion, loans that are maturing this year. That's obviously kind of scary. And if these investors, if these institutions, these companies that invest in real estate can't refi, how much longer can these mortgage companies continue to extend and pretend? So I think that is just a data point to keep in the back of your mind, because if something happens to that, if something really happens to that and all these businesses, all these companies can't pay their mortgages, it's really going to have some 2008, 2009 vibes. It's not going to be a repeat of 2008, 2009, but it'll be probably close. It'll probably be very close. And that would be, I think, a catalyst that would cause the feds to basically lower interest rates back to near zero, right? And I covered that in yesterday's stream. So we will see what happens. Again, I keep my eye on the 10-year treasury. Now that I know that real estate is really tied to the 10-year treasury and not to the federal funds rate, in regards to mortgage rates and all that other stuff, you know, and REITs, real estate, technology sectors. There's a lot of sectors that are interest rate sensitive, but I can't find one that's the most sensitive aside from bonds like real estate. So this is interesting. Anyways, I just wanted to share that chart because I found it this morning. I was reading through some articles for REITs, and I came across this, and I think, I thought, hey, these, everyone would kind of like to see something like this. It's a Wealthy Life says, I think the Treasury has $2 trillion maturing this year. That is wild. Yeah. Yep. Yeah. QE is coming. I absolutely agree. So nerdy film girl, I said fangirl. Nerdy film girl says, I just bought SCHD. I hope my timing was okay. Well, you know what? Let's take a look at that. Why not? Let's take a look. See what that's looking like. I'm in Thailand, guys, as I keep reminding everyone. So I have to keep doing this. SCHD ETF. All right, let's take a look. If you bought some today, yeah, I mean, you can't go wrong. There looks like there was a pretty decent dip. Compared to what? Let's see. All right. So yeah, you have about September, October, November, December, January, so like 5 months. Yeah, I would consider this a decent buying opportunity right here in my eyes. I mean, everyone has a difference of opinion, but I would consider this a good buying opportunity. So, great job taking advantage of that. Anyways, moving on. Just want to take a look at some curve yield, curve ETFs. I don't know if you guys are familiar with this one. I came across this. I had someone reach out to me on Instagram. Basically, they migrated all their money out of YieldMax and moved it on to Curve. And he had asked for me to just take a look at Curve and give my thoughts. I'm going to do probably a more deeper dive on this stuff. But I thought, in case anyone else might know stuff about Curve, please let me know. But I mean, it's pretty much all the same, right? Cover call ETFs, high expense ratios, monthly distributions. It's pretty much the same across the board. But I just wanted to take a look at these and just kind of get my thoughts together. I don't know if any of you guys have ever come across these. Again, there was a YouTuber, Pay Me in Dividends, that covered this. I don't think I had a chance to really look at that video. But yeah, it looks like they have Apple. They're doing cover calls against Apple, Amazon. I'm guessing QQQ, Google, Microsoft, Netflix, and Tesla. So yeah, kind of a similar playbook like YieldMax or other, cover call ETF providers. And these are all paying monthly. So let's see. Let's take a look at see what AMZP, how that's performing. No, you know what? We'll look at KQQQ. ETF. And this is not, in-depth research, guys. I'm just taking a look. I'm just curious myself. But it looks like it's actually been trending upward. So they've been able to take advantage of the growth. I mean, it's not much, 12.9% since September or August. No, since July. Holy smokes. Let's just see what that looks like against the actual QQQ. So we'll do 1 year. And we'll do, was it July? Wow. Okay. So it's actually one in almost close to 1-1. So that's surprising. Yeah, that's really surprising. I mean, the yield is kind of trash. The distribution rate is close to 7%. So I mean, and it's paying monthly, and you're getting capital, or you're getting capital appreciation. That's interesting. Yeah, this is interesting right here. I'm gonna have to take a deeper look at this one. All right. So, um, yeah, this is something I just again I wanted to take a look at. We're gonna end the segment here and kind of just go into some lost porn, lost corn, excuse me, because this one is a doozy. This one is kind of this one is interesting. I didn't have a chance to go through all the comments. I don't know what the actual OP did. Dangerous piece 8811. But yeah, this right here, I don't, again, I can't confirm whether this is 100% authentic or not, but either way, this is so bad. This is horrible. This is absolutely horrible. This would go on a wall of fame somewhere. So we see this person lost basically $215,000, right? I don't know if he just has it as all. So I'm guessing this is probably over the span of probably a couple of weeks, maybe a couple of months or something. I have no idea. I can't imagine this was all at once. Maybe it was though. Just like that other guy who was, basically gambling on DJT stock. So we'll see. But the comments are absolute gold. Just excellent consistency. Your ability to go down and go down hard will serve you well in this new and exciting line of work. Oh my God, that's horrible. The pentagon, the hexagon, the octagon, the portfolio guy. Oh man, I might have to save this picture. I like this picture. First time. Oh man. Yeah, this was months ago too, in case you guys didn't see that. But yeah, this is from 5 months ago, and I just saw this. I was like, holy crap. Holy crap. On the bright side, at least you can take advantage of those tax write-offs for a number of years. So, I mean, you got what, $3,000 worth of losses that you can claim. So this person is gonna have, shoot, $215,000 loss. Divided by, I guess, 3,000 a year. 71 years worth of tax loss harvesting, I guess. Oh my God, that's so bad. That is horrible. Yeah, this is terrible. But yeah, guys, that'll pretty much do it for this these segments. I really don't have much else that I'm looking at. Today I honestly, in all honesty, I didn't get much good sleep last night, so kind of fighting off the sleepies here with the coffee, but yeah, I saw this and I was like, yeah, this is definitely going to be a down day for most markets, and it absolutely was. So, but yeah. So let's just take a look at some comments here. If anyone said anything else new, I mean, what do you guys got for plan for the weekend? What's new on the weekend? What's on the docket, on the schedule? I got to look at that plane crash that you mentioned earlier, Aloha, because that is crazy. I can't believe another one just happened. Damn, that sucks. Philly plane crash. See what that looks. Pinewood Derby. Enlighten me. Damn, what is that? I have no idea what that is. Oh my God. Yeah, I'm looking at the plane crash now. Oh my God, that's crazy. That is wild. Man. Oh, you race Wooden's car. Okay. Okay, I got you. Yeah, I got you. I used to like I think I attended one when I was like really really young. Yeah, I'm familiar with that now. I am working on a video, guys, and I mean you guys will get a sneak preview. I mean, might as well, right? We're in here. We're all just out here hanging out. Let me give you a sneak preview of this video. I hope to work on this weekend. I want to get it a little more. I don't know. Like I'm gonna basically be reviewing a couple AI ETFs, but I'll give you guys kind of the insider scoop so far. So let me go back to this. All right. So the first one, yeah, is from Global X, and the whole premise of the video is basically to be able to take advantage of AI via AI ETFs. So I did some research on a couple different AI ETFs, and I basically picked out of the litter the ones I thought were interesting. You can always go with like a VGT, a QQQ, call it a day, because those are moderately tech heavy to really tech concentrated ETFs. So you don't, if they're tech specific sector ETFs like VGT or FTech, from Fidelity, you don't really have to do much guesswork there, right? They're just going to invest across the spectrum in technology companies. So you're going to get a piece of AI anyways. But I was wondering if there's specifically, tech AI ETFs out there. So these are the ones I found. One's from Global X. It's called the Artificial Intelligence and Technology ETF. And this one has a ton of holdings, that we all are kind of familiar with. You have Tesla, you have Meta, you have, let's see what else in here. Yeah, Google's in there, Apple, Nvidia, Microsoft, a bunch of hardware companies, a bunch of semiconductor companies. So, they're all in there. I mean, that was like unsurprisingly. Then there's the iShares Tech Independence Focused ETF, and this one was more of a tech focused ETF on AI, or for companies that are investing or developing AI. So I thought this was a really good one too. And again, I'm going to do kind of more of a deeper dive on these companies or on these ETFs this weekend. And of course, they have similar holdings to the Global X AI ETF that I mentioned earlier. And then, of course, you can never go wrong with VGT, right? Like if you want to take advantage of anything technology focused, just invest in a broad ETF like VGT. You can always go with the individual holdings. You can always go with like an Nvidia, Microsoft, a Google. I think it just goes without saying now that these companies, if it's AI or tech related, just invest in them. Like it just kind of goes without saying. So Kenneth Bateman says, "Hey Eugen, would you like coffee as much as you did if it did not have caffeine?" Hell no. Hell no. I don't think I would drink any coffee if it didn't have caffeine. I like coffee. I love the taste of coffee. Caffeine is obviously, important, an important piece of coffee. But I've had I don't know. I've never had good non-caffeinated coffee. Like I've tried it a few different times because I was just experimenting, I suppose. I was trying to limit my caffeine because I do drink a lot of coffee or caffeine type of products. But yeah, I don't think so. Because coffee, I mean, it has like such a great, like when you're really getting into the whole tasting thing, you can get notes of like deep chocolate, notes of like toasted almonds, notes of this and that, like refined coffee, good coffee. You really do get these notes. And especially for like espressos, you can really get that really deep, smoky flavor, I guess a dark chocolate, or even there's some coffees out there that have really unique flavor profiles. And I like just trying it. And then, I don't know. Yeah, if it didn't have caffeine, I don't know if I would drink it, to be honest. But yeah, I definitely need the caffeine. I know this. So It's a Wealthy Life says, so AIQ has Tesla as number one. This is why Tesla keeps going up. More and more people are piling into these instruments. Yeah, I would agree. I would absolutely agree. The reason why I bring this up from Kenneth Bateman is because people conflate liking coffee because of the caffeine. To really see if you like the coffee, drink decaf for a month. Oh no. I mean that's cool. No, yeah, I tried the decaf stuff and I just kind of covered that as well. But yeah, I don't know. I can't do decaf. I need caffeine. Like I know this, but I won't say that I drink coffee. Like you don't taste caffeine, right? You taste coffee for other things. So I don't know. Like could I just take a caffeine pill and call it a day? No, I don't think I could, to be honest, because this has like become part of a daily ritual for me now. So I like coffee. I like drinking coffee in the morning. So Dan says I drink tea. Most have caffeine. Like I tried to drink tea. I try to move off coffee and start drinking tea, but I can't do it, man. I just can't do the tea. I tried it. I tried it for a while. I was still getting like I get so if I don't have coffee slash caffeine, I get really bad headaches. I'm not gonna even try to front. I tried to wean myself off coffee or caffeine this one time when I was in Jordan. So I went almost a week, but like by the third day, the headaches were so bad that even like Advil or Tylenol was not helping. No, like the headache medicine or whatever, the NSAIDs or whatever, they were not helping at all. Like the headache was that piercing, and I think it was like the fourth day where I was like, you know what, I'm just gonna have a small cup of coffee, like less than half a cup, and just to make the headache go away, and the headache just disappeared. My body is pretty much primed on caffeine and coffee at this point. This is so bad. It's so bad. I know it is. Uh, film girl. I keep saying fangirl. I don't know. Sorry about that. Nerdy film girl says, question that you might know: why do some brokers allow fractional shares and others don't? That is a great question. I don't have an answer for you other than I think it has something to do with probably like either costs or expectations. There are some brokerages out there that also, they don't do commission free purchases, right? So like Robinhood, M1 Finance, Webull, a lot of the newer brokerages, they removed commission trading, right? So I could buy shares. I don't have to pay a commission. I used to have to pay like $4 or $5 for every trade when I used to invest with Fidelity. I think Fidelity removed all that and now they allow fractional shares. I think it has to do with something in the background, like something with the brokerage, interacting with, the clearinghouse or something. I know that's a lot of technical jargon. I honestly don't have an answer. But you know what? Let's take some time and see if we can find an answer. All right, let's see. Why do some brokers allow fractional shares and others do not? Let's see what Gemini tells us. All right, some brokers allow fractional shares while others do not because there are no industry standards requiring them to offer this feature, meaning each brokerage can decide based on factors like their technology capability, customer base, and overall business strategy, with some choosing to prioritize the accessibility of smaller investments by enabling fractional shares, while others may not see the added complexity as worth it. This can also impact the fees associated with trading. Oh, well, the more you know. I mean, I didn't know this. That was a great question. Kenneth Bateman asks or says, "Do you still think VGT is a good idea considering the S&P 500 and even broad US is very tech heavy?" Uh, I would I would consider VGT honestly. Let's see how do I phrase this. So yeah, the S&P 500 has tech. Yes, QQQ has tech, but if you want a really tech heavy focused sector ETF, I would go with VGT, right? If you want that, because I mean, there's a lot of companies in the S&P 500. Consumer cyclical. You know what? Let's take a look at that. Let's take a look at that. Maybe we can find something. Um, S&P 500. We'll take a look at that. Do do do. You know what? Maybe we can just go to good old Seeking Alpha. All right. So SP 500. So if we go down, we can see. Yeah, so you're going to have, wait, where is it? Ah, come on. Let's do SPY. Let's do SPY. Where is it? Holdings. Yeah, so you're going to have the consumer defensive, energy, utilities, real estate, all these other ones, right? You're going to have all these other guys. But if I don't care about any of these, in all honesty, like I don't care about any of these other sectors, and I just want technology, because maybe I'm more like, maybe I just lean more towards tech. I like tech. I think they're gonna obviously be better than a lot of these other things. I don't care for utilities. I don't really care for energy or any of that other stuff. Then I would just go with something like a VGT. But again, that you open yourself up to risk, because if the entire sector takes a dump, you know, let's say we have another 2008, 2000, another 2000, you know, bubble, like another tech bubble of some sort, and it pops, you know, that your downward risk is elevated by a bit, right? It's elevated by a lot. Whereas, you know, the S&P 500, you know, you're spread across technology, you're spread across all these other sectors. So you're a little more, you have a little more buffer, a little more cushion in case something bad was to happen. So those are kind of my thoughts on that. Nerdy Film Girl asks, I kind of want to switch to Webull though, because the charting on E-Trade is horrendous. I know some people that use Webull and they like it, but I don't know if they ever had like a professional brokerage like E-Trade, or Interactive Brokers or whatever. But I know a lot of people do like Webull. I haven't heard anything negative about Webull. So Kenneth Bateman says the real reason it takes tech resources or some brokers like Schwab can just leverage idle cash for interest. Yeah, that's true too. Yeah, that's true. Although, you know, I gotta get rid of this right here. This is so it's so bad. I never like I don't keep money in a money market account. Maybe I should, because it's easy interest. I just never have. But it might be something, like it would be nice to make money on just idle cash. I don't know why I don't do it, because I have a pretty sizable cash allocation right now. I just don't do it. I don't know why. I said on one previous stream that I just didn't want to have to constantly keep transferring money in and out. Like if I need money, I need it now, and I don't want to have to constantly keep transferring money in and out. So I opted against that. So Dan asks, does anyone do cover calls on TQQQ? I haven't found one. I haven't found an ETF that does one. Let's see. Maybe we can find one. What is TQQ? I thought that was a cover call ETF. So ProShares Ultra Share or Ultra Pro QQQ seeks daily investment results before fees and expenses that correspond to 3 times the daily performance. So it's using leverage, right? Is that what I'm understanding? Yeah, seeking magnified gains will also magnify losses. Oh man. You know, there is a and I don't have it right now, but there is an ETF that does cover calls on a leveraged ETF. And I think it was Bitcoin. I think it was a Bitcoin ETF. Man, I don't remember that name. Maybe we covered it. Maybe it was YBTC. Let me see if it's YBTC. No, I don't think this is it. No, this was not it. No, there is I know there's one. I can't remember what it was called though, or who was the provider. Maybe it was it wasn't Yield Max. It's not Curve. It's not Round Hill. There's one more out there, and I can't remember who. Maybe it was Yield Max. We'll take a quick look, because why not? We got time. Okay. Yield max. AI option, blah, 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 MSTR, Ultra, Bitcoin. Let's just take a look at that one. Oh, well, let's take a look at that one. So Ybit, who are they writing calls against? No, Ibit. Yeah. So they're writing calls against Ibit. So your standard Bitcoin ETF. Okay, so there's nothing new here. I know there's a leverage one. We're gonna find this thing. Yeah, not here either. And which one is this one? This one, the short N100 option income. So yeah, they're doing cover calls against a short strategy. Man, this crap just surprises the hell out of me. Yeah, so. Yeah, I don't know which one. I know I seen it. Let's see if we can reverse engineer one. Let's do 3x levered QQQ covered call ETF. No. Why am I not surprised that it's going to be on Reddit? Nothing. Yeah, I'm not sure, to be honest, man. Yeah, I'm not sure. It's a Wealthy Life says these instruments are cray. Bro, that doesn't mean just start putting all your money in these things. You're ever since you started like seeing these, I feel like you're starting to learn the dark arts, man. You're starting to get tempted by the dark side. That you want to start putting all your money in these levered products or these cover call options or whatever. All this insane power. Yep. Oh man, guys, I'm not gonna lie. I want to put some money into something super levered, but I just don't know what. It would be it sucks to say, but it would be fun because you shouldn't be gambling your money like that. But at the same time, it's like, I mean, it could also go up, right? You could also make some money. I just don't know what to buy. I just don't know what to buy. MSTR or MSTY Misty, I think is probably going to be the most I go. I don't think I'm going to add any more cover call ETFs. If I do, it would probably be something that's more broad, maybe like a QYLD or something, or maybe another yield max fund that has a couple more, holdings than just one. Because man, like it is really scary to be putting your money into a cover call ETF that's doing calls against one single company. So the diversification is completely out the window. So you're going to inherit a lot of the risk that comes with that. So it's going to be interesting for sure. But I would, again, if I was to be a lot more serious, I would probably go with something a little more diversified. Like, I don't know, maybe this one right here. I have no idea. This is, again, a lot of this stuff is still new to me. Like I've always known about it, but I've just never put money into them. or really took them serious or researched them. Because with when QYLD made its waves, everyone always talked about nav erosion, but with yield max, it's like there's two extremes. You can make a lot of money where the nav erosion doesn't even matter, or you can just experience loss and nav erosion. You can experience like no distribution income and nav erosion. So again, it's like you're taking a huge gamble on these products. And then like to wonder if it's going to be, like this. I'm not surprised this is at 100%. I mean, SMCI was super, super volatile. Oh shoot, we got the legend, the man, the myth, the legend in the chat. We got Robert C. Edson in here. What's up, brother? We're just in here shooting the shit, man. Just talking about all these investment products out here. Dan's over here talking about how he wants to YOLO cash and just, go all in. I don't know what else. Yeah. Let's, yeah, I mean, the SMCI cover call ETF, I mean, like that one, again, I wouldn't touch that with a 10-foot pole. I wouldn't touch SMCI, period. But some people are like, some people believe in the company because of this whole AI boom. They say that, SMCI, they're partnering up with NVIDIA. NVIDIA actually name dropped SMCI in one of their presentations. So people are really, really bullish long-term on SMCI. Me, not so much, just because of all the really shadowy crap that they've done in the past. Robert called us nerds. Nerds. Hey, these nerds are trying to make money, all right? That's what we're here for. We're trying to make money. What the hell is that other freaking ETF provider? It's driving me crazy. It's not Yield Max. It's not Curve. It's Defiance. That's who I'm thinking of. Yeah, thank you for telling me, guys. It's Defiance. That's who it is. Yeah, there we go. Here we go, right here. This is what we were talking about. Leveraged freaking ETFs. Yeah, let's take a look at some of these guys. How do we get there? I just want to see leveraged. Let's see what they have for income. Maybe this is it right here. This is the one I was thinking about. Oh my God, this is crazy. The strategy's objective is to generate weekly distributions by selling option premiums on a daily basis. That is crazy. Yeah, ODTE has a cult following. There's like some people who, if you even say anything bad about ODTE, like people will come at you with pitchforks. It's crazy how some of these ETFs build cult followings. But yeah, let's look at another one. Let's look at the MicroStrategy 2X long. Let's see what that's looking like. Seeks daily leveraged investment results of 200%. The daily percentage change in the share price of MicroStrategy. Because a fund seeks daily leveraged investment result is very different from most other exchange traded funds. It is also riskier than alternatives that do not use leverage. There's no guarantee that the fund will meet stated objective. The fund should not be expected to provide 200 times the cumulative return of MSTR for periods greater than a day. Yeah, there we go. There we go, right here. Go ahead, Dan. Drop all your money in here. Drop your cash out your 401k. Drop it into here. I found you the one thing, all right? That's gonna just quadruple your money overnight. This is wild. This is crazy to me. Yeah, a levered cover call ETF. Qualcomm, in my opinion, let's take a look. I mean, we'll just take a quick look here. Let's see, Qualcomm. So yeah, obviously it's the AI hype. I know Qualcomm is engaged in some bigger AI projects, but I don't know for what. I mean, this is all surface level stuff. All right, we're not really deep diving here. Year over year, they look like they're doing pretty well. Yeah, see, you can even see it here. Year over year, like they were they were doing crap, and then yeah, and then they just like started spiking in their year over year revenue. Yeah, so it's because of this AI stuff. I don't know too much about Qualcomm, like specifically about them. I don't know what they build, uh, or what their product lining is, but I'm sure I know it's hardware related, of course. I just don't know what they do in in terms of production. Like what are they building? Oh man, Kathy Wood. Nah, dude, don't listen to her. Don't listen to Kathy Wood. None of her stuff has been doing good. Like look at that. That was her baby. Like this was what put her on the map. This is what really uh made ARC innovation such, like it was a Wall Street darling for a while. This made her name. And this thing is not recovered. It's not. I don't think it's ever going to recover. It's underperformed by a lot, even against like standard indexes. Yeah, look at that. That man, I would be so pissed. I would be so pissed if I bought up here, and I did, but I sold out. I sold out at a gain, so I bought it somewhere. I don't know. It was 2020 something. I ended up getting out of it before. Uh, I don't know. I just didn't. I didn't trust it. I was like, let me get my money out. 125. Oh my god. Yeah, that's hardcore, bro. 125,000. That's hardcore. Damn. Well, ladies and gentlemen, I have to get off here because I have a call here in about 5 minutes. But I appreciate everybody joining the stream. Hope you guys got some fun from it. Hope we all learned something. I didn't know about the brokerage thing that well, man, I keep butchering her name. Nerdy Film Girl had brought up. I didn't know that about brokerage firms, that they can. There's no industry standard, that they can basically make it up as they go. So that's pretty cool. Um, but yeah, guys, I got to get off here. I have to hop on a call. But you guys have a great weekend. Appreciate you joining the live. Appreciate you guys sticking in there with me and just hanging out. Um, Again, I'll be here again on Monday. All right. So you guys have a great weekend. Take care and don't have too much fun. Don't YOLO your money into, leverage cover call ETFs.